Dear students, good morning, good evening, whatever the time is. I hope it is good for you. Students, obviously, you people are studying Finance Act 2024. Again, in the previous class, the entire discussion was more or less on income tax calculation. Same thing will be here also, but in today's class, we are going to study few additional rules. We'll be discussing pension. We will also be discussing the concept of ANI, adjusted net income. And one more thing, we know that the personal allowance is 12,570. But in today's class, we will learn when this personal allowance starts reducing. In fact, when this PA, personal allowance, becomes zero as well. So pension, we'll be discussing number one. We'll be discussing the concept of ANI, adjusted net income, and we'll be discussing when this personal allowance reduces. So let me share the OneNote with you. Just a minute, it is here. Okay, I hope that you can see the OneNote. Let's see, just a minute. And don't worry at all. Slowly and gradually, obviously, we'll go towards skit question, but it will take time. Okay, now. So topics to be covered in today's class, obviously pension. Now listen. There are two types of pensions, both are in our syllabus. One is occupational pension scheme. I will not be discussing so much this, just a little idea. The issue of occupational pension scheme only comes when an individual is an employee and employer is running this occupational pension scheme. Then obviously if employee is contributing to that occupational pension scheme, that contribution by an employee reduces the employment income of the employee. Right now, of course, we have not discussed the entire topic of employment. Right now, the focus is just income tax calculation. So for that, I'm just giving you a little idea that occupational pension scheme issue only arises when number one, individual is an employee. Second, employer is running the occupational pension scheme. And third, employee is actually contributing into that occupational pension scheme. When employee contributes, it reduces employment income of the employee. That's it. The main thing is in today's class, which we want to discuss, that is personal pension scheme. Now, what do you mean by personal? Personal pension scheme means, just for the sake of concept, take it like that, insurance policy. That individual, let's say individual has taken the insurance policy for herself or himself. Okay, that is personal pension scheme. Now we need to learn when an individual contributes in personal pension scheme, so what are the tax implications? Implication means consequences. So what are the tax implications when an individual contributes into personal pension scheme? And let me tell you one thing. UK government and UK taxation authority, which is HMRC, they encourage their people to go for personal pension scheme. Why they encourage their people? Because they know that if at the retirement age individuals they don't have enough funds, then government will have to look after. So they want them to go for personal pension scheme and they give number of incentives. So let's just start from that. What are the incentives? Personal pension contribution. So now listen, students. Actually, this personal pension contribution, personal pension scheme is like an investment scheme as well. Okay. If you come across a question in exam for 3 marks that what are the advantages of personal pension scheme? So I'm telling you the advantages. one by one. Number one, according to HMRC, whatever individual contributes in personal pension scheme, it is treated as 80%. 20% is paid by HMRC. So let me first write, then I'll explain how come it is a benefit. So number one is individual contribution is 80% and 20% is paid by HMRC. Now the question is, sir, how come this is an advantage? Let me tell you. Let's say, assuming, okay, you have contributed 10,000 pound in an insurance policy. You have contributed, let's say, 10,000 pound in an insurance policy, which is, let's say, your personal pension scheme. HMRC says whatever you have contributed, it is 80%, 20% will be paid by HMRC. The question is, 20% paid by HMRC, how come it is an advantage for the individual? Let me explain. Let's say you have contributed 10,000, which is 80%. If I convert this into 100%, 100 upon 80, I'll get 12,500. So this is, let's say, paid by Mr. X. The difference of 10,000 and 12,500, 2,500 will be paid by HMRC. Now let me explain the benefit. Mr. X has paid to the insurance company 10,000. But on the behalf of Mr. X, 2,500 will be paid by HMRC to the same insurance company, to the same insurance policy for Mr. X. It means funds will grow for Mr. X in that insurance policy not by 10,000. That insurance company will record the total contribution of 12,500. Now try to think that someone is contributing 10,000 and 2,500 someone else is contributing on the behalf of that person, and logically to that insurance policy the total amount is not going 10, it is going 12,500. So obviously that's an advantage. Take it like that you are keeping 10,000 in your bank account and someone else is giving you 2,500 for you to take that, also keep that also in the same bank account for you. Obviously it's an advantage. So the first advantage is whatever individual pays, it is 80% in the personal pension contribution, 20% is paid by HMRC. That's an advantage number one. The second advantage, what is that? We know that basic rate band ends at 37,700. Okay. Higher rate band ends at 1,25,140. Another advantage of PPC, personal pension contribution, is that basic and higher rate band both will increase by a gross PPC. Let me explain. Basic rate band, higher rate band. Basic rate band ends at 37,700 and higher rate band we know that it ends at 1,25,140. Now, this will increase, both of the limit will increase by gross personal pension contribution. Both of the limits will increase by gross personal pension contribution. In this way, obviously you will be saving tax. Earlier, the basic rate band limit was only 37,700. Now, due to gross PPC, your basic rate band limit will increase. Your high rate band limit will increase. So the second advantage of personal pension scheme is basic and higher rate band both will increase by gross personal pension contribution. Okay. Third advantage, gross personal pension contribution reduces ANI. What is ANI? adjusted net income. Now the question is, sir, gross PPC reduces ANI. What kind of benefit is this? Let me explain. Let me first explain the format of ANI, and then I'll tell you what kind of benefit is this. But before this, let me explain through a question, then I'll come to the point number 3. Just a minute. Mr. X, assuming property income, which is rental income. Let's say the property income is 90,000 pounds. Okay. And we have personal pension contribution 20,000 pounds. The required is, okay, just a minute. I want to make this employment income. Employment income is 90, personal pension contribution is 20, and the requirement is income tax liability. We know that employment income is a non-saving income. And let me tell you one thing, some of the students, they make one mistake. Personal pension contribution is not deducted from any source of income. Because student, they think that that's an out, yes, it is an outflow. That's not your expense. Okay. So the contribution in PPC is not deducted from any income. So let's calculate tax. Employment income is 90,000. Let me deduct personal allowance. 12,570. Here comes taxable income. 90,000 minus 12,570, I'm getting 77,430. Now calculate income tax. Now listen and listen carefully. Number 1, whenever examiner says in the question personal pension contribution, only PPC is written, personal pension contribution is written, we will always assume it is 80%. You have to gross it up. Means you have to bring 80% to 100%. Repeat. Nothing is mentioned. Only personal pension contribution is written. It is always assumed 80%. You have to gross it up. Okay. Look at this. Normally, we know that basic rate band ends at 37,700. High rate at 1,25,140. Now, the benefit is with the gross PPC, both the limits will increase. 20,000 is 80%, 100 upon 80. I strongly believe we'll get 25. Yes. So look at the revised limits. 37,700 plus 25,000. I'm getting 62,700. 1,25,140 plus 25,000. We're getting 150,140. Okay, now listen. Look at the benefit. Now, basic rate band limit is not going to end at 37,700. Now, the basic rate band limit is revised due to gross PPC. Now, it is 62,700. It means basic rate, of course, non-saving, 62,700 into 20%. See the advantage. Earlier, the basic rate band limit was 37,700, but due to gross PPC, the limit has increased. Now 62,700 into 20%. I'm getting 12,540. The total taxable income which we need to tax, it is 77,430. Out of that 77,430, we have taxed 62,700. How much is left? 77,430 minus 62,700. I'm left with 14,730. This 14,730, of course, now falls in higher rate band because the basic rate band we have fully utilized. That is 14,730. Applicable rate is 40%. 5892. So I'm getting income tax liability 18,432. You have to properly write. Abbreviations are not allowed. Income tax liability 18,432. Now, I hope the one advantage is clear. That is gross PPC increases basic and high rate band limits. Now, let's discuss the rule of ANI. Adjusted net income. How ANI works, let's see. First of all, we have to take the net income less gross personal pension contribution less gross gift aid donation. The final answer is ANI. Now let me tell you one thing. Please listen to me carefully. Tax implications of gross PPC and gross gift aid donation, they are exactly same. In gifted donation, whatever individual has paid, it is 80%, 20% will be paid by HMRC. Your basic and higher rate band limits will increase by gross gifted donation. Gross gifted donation reduces ANI as well. Only the one difference, that is gross gifted donation is examinable in taxation, but it's not examinable in ATX. This is the only difference. Now, the question is, what is the benefit? What is the reason of calculating this adjusted net income? Let me tell you the reason. If ANI, adjusted net income, is more than 1 lakh, then personal allowance reduces. We know that Finance Act 2024, the personal allowance is 12,570, but it is available to only those individuals. Their adjusted net income is either 1 lakh or less. If ANI exceeds 1 lakh, then that individual does not get entire 12,570, it reduces. It means if adjusted net income is less than equal to 1 lakh, then your personal allowance is 12,570. But if ANI is more than 1 lakh, then personal allowance reduces. How? Let me show you a formula. Personal allowance is equal to 12,570 less adjusted net income minus 1 lakh into 50%. Now listen. If adjusted net income is greater than equal to 1,25,140, then mathematically personal allowance becomes 0. Personal allowance cannot be negative. If mathematically it is coming negative, you have to write 0. So simply, if ANI is 1,25,140 or more, your personal allowance becomes 0. Now let's see. A very small question. Assuming we have employment income 1,30,000. Let's say this individual is having employment income 1,30,000. Okay. PPC is 20. Requirement is very simple. Calculate. Number one, how much personal allowance is available. And the second is calculate income tax liability. There are two very small questions. There are two requirements. One, tell us how much personal allowance this individual will get. Will he get entire 12,570 or less than that? And you need to calculate income tax liability as well. Let's try. Let's go for first requirement one. Let me show you the working. We have to calculate ANI, adjusted net income. We only have employment income, that becomes the net income. We don't have any other income. If I had any other income, so I would have added all the incomes. So net income is 1,30,000 less gross PPC. As I mentioned that if nothing is mentioned in the question and question says only personal pension contribution, we will always assume it is 80%. You have to gross it up. Whenever examiner wants to give you the gross PPC, he has to write gross PPC. Nothing is mentioned, it is always net, it is always 80%. You have to gross it up. Gross personal pension contribution 20,000. 100 upon 80. I'm getting 25,000. So ANI is 1,05,000. Obviously, adjusted net income is more than 1 lakh. So that's for sure this individual does not get entire personal allowance. His personal allowance will reduce a bit. Normally the personal allowance is 12,570 less 1,05,000 minus 1 lakh into 50%, 2,500. So this individual gets how much personal allowance? 12,570 minus 2,500. So this individual gets personal allowance 1,070. Okay. Now let's go for the main presentation after the working. Employment income is a non-saving income, we know that. Employment income. How much is employment income? 1,30,000. Personal allowance, working one will get one. This individual gets personal allowance 10,070. Taxable income. 1,30,000 minus 1,070. 1,19,930. Now let's go for income tax. Basic rate. Obviously, the basic rate band will increase for this individual. The basic rate band limit is 37,700. Now, due to gross PPC, which is 25,000, 37,700 plus 25. So basic rate band limit is now 62,700 for this individual. Obviously, higher rate band limit will also increase 125,140 plus 25. 125,140 plus 25 is 150,140. So obviously non-saving 62,700. Let's say working two. into 20%. 62,700 into 20%, I'm getting 12,540. Let me change the color of the pen. Student, the total taxable income is 1,19,930. Out of that 1,19,930, we have taxed 62,700. So 1,19,930 minus 62,700. The remaining amount is 57,230, which obviously falls in high rate. 57,230. Applicable rate is 40%. 22,892. So here comes your income tax liability as well. Income tax liability. 35,000. So income tax liability is 35,432. So we have discussed, let's see, what. Come here. We have discussed this pension, ANI, when personal allowance reduces. We have also discussed when in fact personal allowance becomes zero. Now let me introduce one more rule, very important. That will be the last rule of today's lecture, that is marriage allowance. How this marriage allowance works, what it is, I'll show you. Marriage allowance, how it works. Obviously, to get the marriage allowance, number one condition is marriage. Without that, marriage allowance is not possible. Okay, now what? Actually, due to this marriage allowance, in one spouse can transfer 10% of his or her personal allowance to another spouse. So husband and wife, any one of them can transfer 10% of the personal allowance to another. What is the logic behind that? The tax planning is, for example, if husband does not have the enough income to utilize his entire personal allowance, then he should be transferring 10% of his personal allowance to his wife. If she is in a position to utilize her entire personal allowance, so simply due to this marriage allowance, 10% of the personal allowance will be transferred to another spouse. But before doing that, the first condition, marriage is of course there. The first condition is both husband and wife should be basic rate taxpayer, should be basic rate taxpayers. Okay. Obviously, if any one of them is a high rate taxpayer, then marriage allowance rule does not apply. You really want to get marriage allowance? Okay. The main point is important point. What is that? Both husband and wife must be basic rate taxpayer. Okay. Now, marriage allowance is 12,570. If I take 10% of this, it is 1,257. But Finance Act 2024 says instead of 12,570, make it 1260. So when you want to transfer 10% of personal allowance, it will be 1,260. Now the question is, how marriage allowance works? For example, if husband has transferred 1260 of personal allowance to his wife, will it increase the personal allowance of recipient spouse? The answer is no, a big no. And then the question is, sir, you have just mentioned, due to this marriage allowance, we will be transferring 10% of the personal allowance. If we are transferring 10% of the personal allowance, it is not increased. So basically, one spouse is transferring 10% of the personal allowance to the another spouse, but recipient spouse personal allowance will not increase by 1260. Now the question is, if recipient spouse personal allowance is not increasing by 1260, how it works? So let me show you this with the help of a question. I hope that screen is being shared. Okay. Let's see a question. Let's say we have husband and wife. Employment income. Let's see, husband is having employment income 9,000. Wife is having 25. And the requirement is calculate income tax liability for the wife. Income tax liability. So from the question, it can be seen that husband is not in a position to utilize his entire personal allowance. So obviously, we should be transferring 10% of the personal allowance to his wife. But how it works, let me show you. Employment income of the wife is 25,000. Deduct the personal allowance, which is 12570. Okay. We'll get taxable income. 25,000 minus 12570. The taxable income is 12,430. Obviously, the entire income falls in basic rate band. It is an employment income, non-saving. So apply 20%. Income tax. 12,430 into 20%. Let me close this. Just a minute. Okay. 12,430 into 20%. I'm getting 2,486. Now listen. How marriage allowance works? Simply, less marriage allowance relief, less marriage allowance relief. Simply 1260 into 20%, which is 252. So 2,486 minus 252, that is 2,234. This is the income tax liability. So how marriage allowance works? Number one, you will recipient spouse personal allowance will not increase by 1260. All you need is just deduct marriage allowance relief, which is 252. And let me tell you one more thing. Marriage allowance, in case of marriage allowance, it is always 1260, which will be transferred to the recipient spouse, always. You cannot do like this. For example, in this question, if husband had 12,000 employment income, so you cannot do this, that less 12,000 is utilized by the husband and the remaining personal allowance we will transfer to the wife, not allowed. If you want to transfer, it has to be 1260. It cannot be less than that. It cannot be more than that. For example, husband, wife, assuming this time employment income. Let's assume the wife is having employment income of 12,000. Okay. Husband is having employment income of 30. Of course, both are basic rate taxpayer. Now, the requirement is income tax liability for husband and wife, and also claim marriage allowance relief. Now, how it works, this is very important. Now, let's start the calculation. Wife income is 12,000. Now, listen and listen carefully. Of course, it can be seen a wife does not have the enough income to utilize her personal allowance completely. Now, what is not possible? She cannot do this to utilize 12,000 and transfer remaining to the husband. Not possible. If you people want marriage allowance relief, husband and wife, it has to be 1260, which means that the normal personal allowance for the wife is 12570. She will transfer 1260. It means how much personal allowance she gets? 12570 minus 1260. It is 11,310. So she will be getting a personal allowance of 11,310. So she will have to pay a little bit tax. 12,000 minus 11310. It is 690. So income tax liability for the wife is 690, 20%. So a very important concept which I wanted to clear is if you people are husband and wife, you are going for marriage allowance, it has to be 1260. It cannot be less, it cannot be more than that. Now, husband. Employment income of husband is 30,000. Of course, he's a basic rate taxpayer. And to get marriage allowance, both husband and wife must be basic rate taxpayer. Personal allowance is 12570. Let me repeat again. Recipient spouse personal allowance will not increase by 1260. Okay. You have to strictly follow the presentation. If you think that, sir, even we do not follow the presentation and we increase the recipient spouse personal allowance by 1260, we'll get the same answer. You are right. You are correct. You will get the same answer, but you will not get the marks. Do you need marks or the answer? Choice is yours. I think you need marks. Okay. So 30,000, 12570. So taxable income is 17,430. So you have to follow the presentation, which I have mentioned you, okay, which I've taught you. So this is the taxable income. Simply, let's calculate income tax. 17,430 into 20%. I'm getting 3486. Now less the marriage allowance relief. Less marriage allowance relief, which is always 252, 1260, and then 20%. So 3486 minus 252 gives me 3234. 3486 minus 252. Great. So students, that was all about today's class. In today's class, we covered the concept, the rule of personal pension scheme. We also discussed ANI, when personal allowance reduces. In fact, then we added one more small topic, that is marriage allowance. So that is all about today's class. In the coming class, we will also be discussing income tax liability calculation with different rules. And after that, we'll inshallah start the proper topic, property income, rental income. But there will be one more class on income tax liability calculation. Thank you very much from my side. Have a good day. Let me stop this. Okay, dear student, just ended the class, and I just wanted to add one more thing in today's class. That is, we know the normal sequence of personal allowances. First to deduct the personal allowance from non-saving income, then we go for saving, and finally from the dividend income. But when it comes to ATX, HMRC allows you to change the sequence of personal allowance if you want to. provided that by changing the sequence of allocation of personal allowance, you will save tax. If you can save the tax by bringing a change in the allocation of personal allowance, HMRC says, okay, we are fine with that. Now the question is, when in ATX, we will change the sequence of personal allowance and what it is. Let me quickly share the OneNote with you. Let me just a minute, just a minute. Okay, okay, okay. I hope you people can see this. Okay. Resume, resume, resume. No, it's fine. Yes. Okay. So very quickly, we'll be discussing when in ATX you will be changing the sequence of personal allowance. So personal allowance allocation. Personal allowance. Okay. Number one is non-saving income. Saving income and dividend income. Now let me tell you. The normal personal allowance allocation is 1, 2, and 3. This is what we do most of the time. But alternative of this personal allowance allocation is available. But HMRC says you can only go for that alternative if it results in tax saving. So let me show you what is the alternative. Personal allowance number 1, 2 will be the dividend income. Wow. And 3 will be the saving income. Now the question is, when will I go for the alternative of personal allowance allocation? Obviously, the number 1 will remain same, that is non-saving. But second will become dividend income. Third will be the saving income. The question is, when do we follow the second way of allocating the personal allowance? Very easy. Let me show you. Let's see a question. Let's say we have employment income. Take it 8,000. We have saving income, let's say 5,000. We have dividend income, let's say 20,000. And the requirement is simply income tax liability. We have employment income, saving income, dividend income. Okay, let me make 4 columns. Non-saving income, saving income, dividend income, and total. I'm just writing employment income is 8. Saving income is 5,000. Dividend income is 20. So it will be 33 total if I'm not wrong. Yes. Let's go for personal allowance allocation. Personal allowance, of course, first I'll be deducting from the non-saving income. Now listen and listen carefully. The entire personal allowance is 12,570. Out of that, we have only used 8,000. Still, how much is left? 12,570 minus 8,000. We are still left with 4,570. Total personal allowance is 12,570. Out of that, we have used 8,000. But still, 4,570 is left. Okay. Now what to do? Should I deduct the remaining 4,570 from the saving income or dividend income? Now listen to me carefully. Look at the amount of saving income. The amount of saving income is only 5,000. Logically, the entire 5,000 falls in a starting rate band where applicable tax rate is 0%. So whenever students, you come across a question where number one, the starting rate band is available. It is available here because you can see that the column of non-saving is having a taxable income 0. So entire 5,000 starting rate band is available. Second, look at the amount of saving income. It's just 5,000. Entire 5,000 falls in starting rate band where applicable tax rate is 0%. In that case, you should not be deducting the remaining personal allowance from the saving income. Now you should deduct the remaining personal allowance from the dividend income, which is 4570. In this way, you will be, of course, saving the tax 12,570. So students, simply you need to remember one point. Whenever you come across a situation where your entire saving income is actually falling in a starting rate band, then please do not deduct the remaining personal allowance from the saving income. Then deduct the remaining personal allowance from the dividend income. Taxable income 5,000. 20,000 minus 4,570. I'm getting 15,430 plus 5. 20,430. Of course, we'll apply tax rate first on non-saving, but we don't have, so I'll go for saving. Income tax. Starting rate band, saving income. 5,000 applicable rate is 0%. Okay. Another point, for the dividend income, we know that in Finance Act 2024, every individual for dividend income gets nil rate band of £500 irrespective of tax paying status. Nil rate band dividend income 500. 0% is 0. So the total dividend income is 15,430. Out of that, 500 we have tax in nil rate band. So how much is left? 15,430 minus 500. We are left with 14,930. Obviously falls in basic rate. Basic rate dividend income 14,930. Applicable tax rate is 8.75%. Students, I'm getting 1306.375. So leave that 0.375. 1306. Let me recheck. 14930. Yes, perfect. So this is your income tax liability. So students, you just need to know one thing. Whenever you come across a question where your saving income falls, entire saving income is actually falling in a starting rate band, then remaining personal allowance should not be deducted from the saving income. You should deduct the remaining personal allowance from the dividend income. You just change the personal allowance allocation. In this way, you will save the tax. For example, you're not going to do that in exam. I'm just telling you for your satisfaction. For example, if in the same question, student says, okay, sir, what if I don't change the personal allowance sequence and I follow the normal personal allowance sequence? Obviously, you will end up by paying more tax, number one. And number two, you will be losing marks as well. It means you're not following the tax planning. It is not a commercial acumen. You're not commercially a wise person. Where I can save the tax in a legitimate way. Why not to save the tax? So just for your clarity, if a student says, if I follow the normal sequence, then what happens? Let me show you. Just for your, I would say, satisfaction, I'm doing this. Employment income is 8, saving is 5, and dividend is 20. Total is 33. If a student does not want to change the sequence, wants to follow the normal sequence, then 8,000, number one. And the remaining is 4,570 from the saving income. Let's see what happens. You will automatically get to know why it is necessary to change the sequence. So 5,000 minus 4570, I'm getting 430. 20, 20430. Okay, now let's calculate the tax. Of course, entire 430 of the saving income falls in starting rate band. Starting rate band 430 into 0% is 0. Again, when it comes to dividend income, every individual gets nil rate band 500, irrespective of tax paying status. The total taxable income for dividend income is 20. Out of that, 500 we have taken in nil rate band. So remaining 19,500 obviously falls in basic rate. Dividend income 19,500, applicable rate is 8.75%. Let's see what happens. I'm getting students 1706.25. Let's take it 1706. Look at this. The income tax liability student, it is 1706. Previously, it was 1306. So you can see that if you're not changing the personal allowance allocation where you should have changed, if you're not changing, you will end up by paying more tax. So you will be losing professional marks as well. So you're not a commercial, it's not a commercially wise decision. So you need to know only one point. So obviously this is not acceptable. This is not allowed because we are ending up by paying more tax. Whenever you come across a question, students, where your saving income, actually entire saving income falls in a starting rate band, then remaining personal allowance should be deducted from the dividend income. So that is all about now for today's lecture. Have a nice day. Thank you very much.